Pranjul Bhandari, Chief Economist, India at HSBC Securities and Capital Markets, on the show with us. Pranjul, hi. Morning. Our poll throws up a 25 bips cut. Is that what your expectation also is?
Yes, indeed. We are expecting a 25 basis points rate cut today. We are also expecting that the MPC will continue to hold on to its accommodative stance. And we also expect that liquidity will be held in surplus over the foreseeable future. So all the three pillars of monetary policy easing, which is rate cuts, stance and liquidity, are expected to remain accommodative in this policy.
I wanted to get in your take as to, Pranjul, what the outlook is when it comes to the kind of commentary we will hear. Do you think it's going to be a fairly hawkish stance? And what is it that the street is anticipating?
Well, no, as I just mentioned, I think it's going to be quite accommodative at this point because the central bank has to and should be supporting growth at this point. Let me just take a step back and put this in context. The key thing to look at is output gap. How lower is growth from where it should be. And right now we have a big negative output gap, by our estimate about 0.7% of GDP. Now we think a large part of this, about 60 to 70%, can be met by the fiscal stimulus that we are seeing in the system right now, the corporate tax rate cut, the excess RBI dividend, new disinvestment plans and so on. But that will still leave a shortfall and an output gap of about 0.2 to 0.3% of GDP. And to fill that in, we need more rate cuts at this point. Now the RBI has already cut rates by 110 basis points, but unfortunately transmission is weak this time. Only 30 to 40% of repo rate cuts are actually getting transmitted into lower lending rates. So at this point, more rate cuts are needed to get the same bang for the buck, and that's why we think there is space for more easing. We actually think there's space for about 50 basis points easing in the system right now, 25 today and 25 in December. That's our basic forecast at this point.
Okay. What about the growth target? Do you think that this time around it's likely to be moderated?
Well, I think so. I think, they held this current fiscal year growth at about 6.9% for FY20. I think they'll bring it down to the 6.5% range today. Our forecast is even lower. We are expecting sub 6% growth in this fiscal year. But we don't think RBI will bring it down as much, but it will definitely bring it down compared to where it is at this point.
Understand, Pranjul, in terms of a commentary, what is it that you're expecting? Because clearly we're in the midst of an NBFC crisis, if one can call it that. We all know how, there is not really a liquidity crunch, but unwillingness to really lend, which is something that the economy has grappled with for almost, 6 months, if not more. What are you hoping to hear from Shaktikanta Das on that today?
Well, look, it's a great question. But to be honest, I don't think today's commentary will be any different from perhaps a commentary of the last policy meeting. They will cut rates. They will say that they continue to look for space to cut rates. They are accommodative. They will say that they will continue to provide enough surplus liquidity. And honestly, that's what the RBI can do at this point. They can promise you these things. At some point, the market itself has to evolve, and at some point, transmission has to happen, and demand for credit, supply of credit is like should pick up on its own. RBI is doing what it has to do. It will continue to do that. There's nothing more RBI can do at this point. The rest has to play out on its own. It's taking more time this time because there are concerns about asset quality and so on. But hopefully, just the quantum of rate cuts that they've done and over such a long period, that in itself should sort of lead to higher credit, over the next fiscal year, over FY21. So it's taking time, but I do think it's in the right direction, and RBI does not really need to change its policy at this point.
We were just having some extensive discussions on the state of affairs within the NBFC sector, and it seems like there are still concerns. Renewed fears are cropping back, the tight liquidity situation. Do you think that we will hear something perhaps from the Reserve Bank on some prudent measures to deal with NBFCs and banks, or is that something that at least, market men, economists are really pinning their hopes on?
Well, as I said before, I don't think there'll be any U-turn or anything very new on the NBFC front in this policy meeting. RBI will continue to say that they are keeping banking sector liquidity at surplus, which they are, and with the hope that eventually it sort of seeps into NBFCs as well. And honestly, that is what the RBI can do at this point. Rather than giving a helpline to any particular entity, it can just ensure that system-wide liquidity is in surplus, and I think that is what they will focus on even in this policy meeting.
Pranjul, great to have you on the show, and we'll chat again post-policy, hopefully.